Record. Hello, everyone, and welcome to our Abundant Wednesday. I'm Nina McNamara, and I have with me my wonderful business partner, Shelley Hagan.
Morning, everybody.
Excellent. And today we have a very special guest for you. Again, we just love these Wednesdays where we get to share our network with you guys and some expertise. And today we have Raeann Lefebvre with us. Now, Raeann is, I idolize Raeann. She has been in my life since 2010. So like we're talking almost over a decade. Raeann has been in my life. So she has been my mortgage broker. So when I was doing real estate investing, lease options and stuff like that, Raeann was my broker for purchasing. Raeann was also my mortgage broker for qualifying tenant buyers. Raeann has a wealth of knowledge backing her, helping successful investors propel their portfolio to the next level. Raeann knows what lenders to send you to and what order to send them to so you can maximize your debt servicing and qualify for more mortgages. So Raeann is the owner and the broker of Keystone Mortgage Corporation in St. Albert, Alberta. And we're just gonna kind of have a chit chat here and discuss how Raeann can help you move on with building your portfolio.
Thank you so much for that warm welcome, Nina.
Welcome, Raeann. It's great to have you with us today.
Thank you, Shelley. Good to be here.
All right. So can you tell us a little bit about how it would be to work with a mortgage broker versus working with your bank? Just so people understand the difference, the value of having a broker on your team.
For sure. One of the key benefits with working with a mortgage broker is just the access we have to so many different lenders. There are so many different policies in the lending world that each lender and bank has different guidelines. So when you look at the max number of doors that a bank will potentially finance you or even look at you if you have a certain number of doors, that's a key component when we're looking at real estate investing. Is I always talk to clients when they get into real estate investing about what is your plan? How many properties do you want to have? Is this a retirement plan or is this a short-term plan? All these come into play when I'm structuring the mortgages for the clients because it's going to say which lenders I'm going to send this to first and which ones I'm going to send it to last. Because of that max number of doors, because of the debt servicing calculations, all of that comes into play. So we do have access to many of the major banks in the broker world. Perhaps we would utilize them first, so that way we can max out the number of doors with them. And then we might go on to non-bank lenders, monoline lenders is what we call them, because that'll give you past that 4 or 5 door max. So that's one of the major benefits. You could go to your bank and you could get, 4 properties with them, but now you've hit that wall. You want to expand that and have that future plan in place to know how to structure these properties and the purchases going forward.
Excellent. I remember when we were working together and we'd be talking about, a particular deal. And I love your expression, how you're like, how can we squish this into the box, right? So we would take a deal and we'd squish it so we could work it, so we could maximize it. So, that utilizing the different lenders using, what's that? Rental add back. Did you want to describe that for just a second?
Yes. So that's different lender policies and requirements. So we do, for the most part, the most conservative way to debt service a property is doing an add back to the income for the rental income. So most lenders will say 50% of the rental income is all you can utilize to help with your debt servicing. So that's what you're meaning with the add back. There are just so many different policies out there that we can utilize to extend that, because if you imagine only using 50% of a rental income, you're not going to be able to qualify for many properties, right? So we really want to look at the lenders that are going to allow us to extend that amount, and that goes into the qualification and the different types of lending.
Good to know. So can you give us a brief description of what it would take to qualify a real estate investor? Because we're a little bit different than everybody else, right? Because we're looking to probably buy multiple properties.
Absolutely. So obviously, first big step is having your 20% down. Unfortunately, you can't get around that 20% down anymore. So you need to have a 20% down payment on any property that you want to purchase. When we take a look at that first property, we're going to just, like Nina said, that 50% add back to income. And so that's obviously it's not going to necessarily help your qualifying. So we want to make sure that you have enough income to qualify for that property using only 50% of the rental income. After you get that first property, and you want to buy your second, well, that first property, now we can use a great calculation on. It's called the debt coverage ratio calculator. And what that does is it uses 80% or potentially more of the rental income on that property, because now you own it and you have a history behind the rents on it. So then we'll take that 80% potentially, and we'll use the expenses, the mortgage payments, the property taxes, any insurance and maintenance costs. And usually that is a surplus at the end, as long as the debt service, as long as that property covers itself. And that's the key, is it has to cover itself. And you're not going to buy a property if it's not going to cover itself. So then we take that and we add it to your income. So each property that you acquire technically should decrease your debt service ratio, because we're adding more to your income. And that's how we can maximize your total ability to purchase more properties, is using that after the first purchase, it continues to decrease. And that 50% that we're using on the new properties is really just going to balance out with the surplus that we have on the previous properties you've purchased. And every lender has different guidelines. Like, we can talk about specific lenders, but that's too in depth. But what it comes down to is I take a look at the total picture and I say, this is going to fit this lender the best, based on how I can offset the existing properties and the new property and your income.
Okay,
That
great.
just is amazing, isn't it? That
Yes.
using just the broker and all their knowledge, you can expand your portfolio instead of, say you walk down to your local bank and they're like, 4, that's it, you're done. Whereas utilizing the tools that the broker has, you can really expand your portfolio quite a bit. That's good.
Absolutely.
And you can really see how using a 50% add back on each property, even after you've owned it for a period of time, is just going to continue to increase your debt service ratio. You're going to hit that wall really fast if you're not utilizing all the resources of a mortgage broker.
Absolutely. And that is key as an investor, is you want to keep growing your portfolio, and you need to look at yourself differently, even as an investor. You need to eventually, figure out, how am I going to grow my business? And you can have the right people on your team, such as a mortgage broker like you, Raeann, to help you as you're, evolving your business.
Absolutely.
So what is the best way for a new or a seasoned investor to find a broker that's going to be a perfect fit for them?
That's a great question, because not every single mortgage broker knows real estate investors. Like, we do have our specific niches that we are really good at. And you can be a jack of all trades, but I would, personally say I'm not the best at new to Canada. But what I am really good at is real estate investors and self-employed. So what I'd say is referrals from current investors. That's a great one. Obviously, if they're working with a mortgage broker, they're probably a good one and they know what they're doing with real estate investing. Have an interview with them. Make sure that they can explain to you how this all works. That's going to be key as well, because if they can't explain it really well, it might not be the best fit. You really want to make sure, again, that you're getting that mortgage broker that understands real estate investing and how to calculate rental offsets and all this good stuff, in order to make sure you have the best mortgage broker for what your plan is for the future.
Excellent. Excellent.
Very good. Very good. And can you tell us a little bit, Raeann, about how we can find you if some of our followers are interested in connecting with you to, possibly do some business together?
Absolutely. So my website is mortgageengineer.ca. And I have a Instagram account, keystone.mortgage.corp. I also have a Facebook fan page at Mortgage Engineer, and by email, Raeann, RAEANN @mortgageengineer.ca. And you'll find all my information on my website as well if you ever needed to call me.
Excellent.
Sounds great. We'll make sure to put that information in the caption here too regarding this particular, abundant Wednesday message.
Mhm.
Wonderful.
Excellent.
People know how to find you.
Yes. Well, thank you so much for your time, Raeann. I appreciate it. And I hadn't seen you physically for a little while, and I was so excited I got to see Raeann.
Yes.
I was thinking the same thing, Nina. It's been way too long, and it's so good to meet your partner, Shelley. That's it's a great partnership you guys have there.
Yeah,
It
it's
is.
great to meet you, Raeann. As I
Right on.
said before, Nina talks very highly about you and your skills, and you're very, very talented at helping real estate investors. So we're just so thrilled to have you on the show today.
Thank you so much for your time.
Thanks, everybody. And I
Thank you.
hope you have an abundant Wednesday and a fantastic day. Thanks again from Nina and Shelley.
Bye, everybody.
Bye.